I'm going to tell you how you can make money trading using gap fills. I'll tell you what a gap fill is, and then I'll tell you what this report says. So here we have SPY. To the left of this vertical line is Friday. To the right of the vertical line is Monday. So you can see that Friday closed at 421.20, which is this red line here. Monday opened at 419.60, so it opened below. So that's a $1.60 difference below the previous close. So that's a gap down. When the following day opens below the previous close, that's a gap down. If Monday had opened above over here, that would be a gap up. So it's a $1.60 difference, which is just this price minus this price. So then that gives you a $1.60 difference. So that is what a gap is. Now a gap fill is when Monday touches this red line. So when it retraces back to the previous day's closing price, and that's an important thing to keep in mind. A gap up would fill when it touched this closing price. A gap down fills when it touches this closing price, this red line here. So let's talk about this report. So now what we're seeing here is we're seeing all the gaps up for SPY in the last year and all the gaps down for SPY in the last year. We're seeing how often the gaps down filled, how often the gaps up filled, and how often the gaps up did not fill, and how often the gaps down did not fill. So this specific day, the gap filled because price touched this red line. If price had stayed below this red line, if it went up and then came back down and kept going down, that would count for not filling because the price would not have touched this red line. So how do you use this in your trading? Well, when there's a gap down, you can see that 60% of the time in the last year, the gaps tend to fill. So this should give you somewhat of a bullish bias. It should give you a long bias on the day. So if you find a good entry below the gap fill, which would be this red line here, you can start to target or leave runners to the gap fill. So 418 is a support here. Price came down into 418. If you had gotten long here at 418, you can set targets at 419, 420, and then you could leave runners to really maximize this trade to the gap fill. Because 60% of the time, price will touch this red line at some point. Now, this example, price went much further, but these gaps should give you a bias on the day. So you can see 60% of the time, this gap is filled in the last year. 67% of the time, gaps up have filled also. So it's the same principle. Whether it's up, whether it's down, this red line, this previous day's closing price is a very important thing to look at when you're trading. So that's how you can use gap fills to make money trading.